Hi everybody, how's everyone doing today? It's a wonderful Thursday and the time has come to begin our weekly trading session. My name is Thomas. I would like to welcome everyone to this wonderful event and a place where you can learn how to trade, or maybe you can expand your trading horizons, your trading portfolio, and maybe you can add up a new trading strategy to your arsenal of trading strategies. So it's always great to it's a pleasure, it's an honor, to conduct these webinars. So once again, my name is Thomas. I would like to remind you, and I'm an analyst and a trader with Olymp Trade, and I will conduct the following webinar for you guys. So please prepare your questions. I will be happy to answer as many as I can and as fully as I can. Uh, Today we have around 5 minutes, around 5 minutes for introduction, and then around 30 to 35 minutes of trading. So today's strategy is going to be a strategy called Safari, and this strategy is, well, in my opinion, one of the easier ones, even though it belongs to like expert strategies group. But in my opinion, it's a very it's relatively easy to use, and the signals in this, so the underlying signals in this strategy are very, very simple and very easy to comprehend. And yeah, let the show begin. So one thing, guys, if you want me to reply your questions, please write them in English, because I don't really know any other languages. So for example, Manish said something, but I cannot really understand what is there. All right. So guys, good evening, everybody. Good evening, good evening, good evening. So yeah, so let the show begin. So first of all, we need to go to the trading strategies tab. So first we need to click on this instrument. Then we go to trading strategies and we need to select Safari. There is a short video which can help you explain how this strategy works. And then you need to click enable, and with a single click, you now have the set of indicators, which are the Williams %R and the MACD indicator with the standard properties. So the standard properties of the MACD indicator are 12, 26, and 9. These are the way they are supposed to be, right? When it was invented. So my question is, how do you... Oh, hi, Thomas. Okay, guys. Waiting for signals. Waiting for your questions. Okay. Now, let me go ahead and explain to you how this strategy works. So in this strategy, we have two indicators. They are Williams %R and the MACD indicator. And as you can see, they are represented here in the form of a histograms. So two independent histograms. They work independently. They are not in any way are dependent on one another. You get a signal from this one, and you also get a signal from this one, and they work independently. So like I said, they work independently, and we need to get two confirmations from the both indicators that belong to this strategy in order to open a trade. So when you want to open a trade in the upwards direction, you need to find a moment of time, or you need to find a situation where the both of these histograms are above the midline. So we have this midline, which is so in Williams %R, this middle line is -50. But you can completely ignore this value. It doesn't really matter in this strategy. And in the MACD, we have the midline, which has the value of 0. So it doesn't really matter, in fact. So basically, the signal for an up trade from the Williams %R is when the when this histogram is above the midline, is above this line, and when the situation is like this, for example, like this, then you can open a trade upwards pretty much at any time. So you do not have to wait for, for example, the current candlestick to close, or for the beginning of the next candlestick, nothing like that. You just open a trade whenever you feel like it. So as long as this histogram is above the midline. And then, secondly, we need to get the confirmation. We need to get a confirmation from the MACD indicator, and we also get a confirmation or a signal from the MACD when the histogram, when the MACD histogram is also above the midline. So when the two signals coincide, when they both point in the same direction, so it can be an upwards direction or a downwards direction, that's when you want to open a trade in the upwards direction. It is as simple as that. For example, here we have a contradicting signal, just to give you an example of a contradiction, so that you don't have an impression that they always point in the same direction. No, they sometimes point in different directions. For example, now the Williams %R histogram is placed under the midline, and the MACD is situated above the midline. So that's called a contradicting signal, and that's a kind of a signal that you wanna skip, and you don't really want to trade when you have such an unclear signal. You only want to wait, and you only want to trade only the so-called pure indicators or pure signals. So let me find an example of this, of such a signal. Something relatively fresh. Okay, so let us go ahead and start with the with commodity composite index, and here we can see that, yeah, they both are in the they both point in the downwards direction. So the Williams %R together with the MACD indicator, they both point in the downwards direction. So we have this the histogram, which is under the midline, and also the MACD indicator is under the midline. So they both point in the downwards direction. And we can go ahead and try and give it a try with the Euro USD, so the Euro against the US dollar. And here we have an opposite situation. So with this setup currently, we have the Williams %R currently trading above the midline, and also the MACD is, well, it's also trading, or it's also drawing its histogram line above the zero line. So that's a signal for an uptrade. So that's how you analyze, that's how you get signals. And with Europe Composite Index, we can open a trade in the downwards direction, because we can see that this blue line points in the downwards direction. And yeah, I kind of don't like such setups from technical point of view. All right, so let us wait for okay, well, guys, one addition to my explanation about this trading strategy. I call these indicators I call these strategies so-called category of strategies, where you can have multiple trades, where you can open multiple trades from one signal. So you don't really have to, for example, in some strategies, for example, where some two moving averages cross, and that's we get a signal from their crossing, you only get one signal at a time. So they cross, and that's a signal for one single trade. So in this strategy, as long as these conditions are intact, as long as they are there, so say like pretty much all this kind of wave, or all this movement from here, from this point in time all the way up to the current moment of time, you could be opening trades in the downwards direction. So that's well, that's called one signal, multiple trades. I call it like that. So yeah, you can actually open multiple trades. You don't have to wait for just like one signal, one trade. So with such trading strategies, you can normally open quite a big number of trades. So usually with such trading strategies, you can open more of a trading strategy, more trades than with I would say like these one setup, one trade kind of strategies. So what does red line in? So that's the simple moving average, but basically it's gonna take me a lot of time to explain, because in order to explain this red line, so you can turn it off. So the signal line, we can turn it off. It's not really relevant in this trading strategy, and also we can kind of change the color, like when it's a little bit yellowish histogram, or we can even select area. Everything is customizable in these in our trading strategy, so you don't have to wait just for one kind of like one signal, one way. Multiple ways of analysis and setups are possible. So this red line is the signal line, but okay, in order to explain it, I will have to pretty much explain you in so much detail about the nature of the MACD indicator. So that's a different topic for today. So guys, gold, a signal in the downwards direction on gold. Because they both histograms or areas, they are both in the they both point in the downwards direction right now. So that's the time when we can open trades in the downwards direction. That's the direct signal for such a trade. Difficult question to answer. My question is, how do you deal with big losses? So first of all, you have to understand that in order to, well, ideally you would want to avoid big losses from happening. So how do you do that? You do that by controlling your risks and by controlling your pretty much you need to control your risks. You need to watch, you need to have your money management rules, and you've got to have trading discipline overall. But in case a big loss occurred, I would strongly encourage you not to chase this loss, because when you start chasing such losses, eventually, usually that is going to lead to more losses in your account. So you just have to accept this loss and try to forget it and start with a new page. So turn that page and go to the next one, and then no matter how cheesy it sounds, no matter how obvious it sounds, but you've got to take a lesson. You've got to get a lesson from this loss, and then I mean, I cannot really suggest. I mean, like I'm not trying to reinvent the bicycle here. Just learn from this loss and try not to just avoid such situations in the future, because there is always, I would say, like in the 95 or maybe 98% of such cases, there is a clear explanation to why this loss occurred. So these such big losses, they don't really happen out of nowhere. They don't happen out of nowhere. There is always some signal, some explanation, some reasoning to this loss. Maybe you avoided, maybe you overtraded, maybe you forgot about trading news, maybe you got emotional. So there is always some reason behind this or such a big loss, and your goal as a trader is to identify this goal, this reason, and avoid it in the future. And yes, the only way to cope with big losses is to really accept them and try not to like let them happen in the future. And of course, after any big loss, so I remember my first losing day, and then I was like shaken, right? I couldn't control myself for the next few days. So the only way how you can deal with that, how you can cope with that, is you wanna maybe like decrease your trading size. So we call it trading size. It means the size of your trading position. So how much money you invest per trade in every trade. So you've got to lower this amount. So maybe go to like $1, even all the way down to $1. Yes, this is not a pleasant thing. We are here for we all come to the financial markets to get big profits, but sometimes you've got to take a step back. So it's like one step backwards, two steps forward. So it works like that. A question from Simon here. What I need to improve my chance to win 100% in my trade? Whoa. Well, frankly speaking, like always winning on the financial markets, or say making 100% winning trades is nearly impossible. Well, I would say not just nearly, it is completely impossible. So if you wanna open 100 trades, and there is no way you can have 100% winning ratio with these trades. So it is just nearly impossible. It is like pipe dreams. It just doesn't exist. But instead, there is a way to make money even if your winning ratio is somewhere around 50%. So there are the loss compensation system, or you can sometimes refer to it as martingale. And another way is to control your or another way is to trade forex. So on forex, if you let your profits grow in your winning trades, like here I have a few forex trades here, and I'm not closing them. I'm letting my profits grow. Sometimes yes, I can close it, but I usually risk a little bit in every trade on forex. I usually risk say 10 to 20%, but with every profitable trade, I'm trying to make at least 80% to 100% from my investment. So this allows me to so one winning trade helps me cover up the loss from the previous say 3 or sometimes even 4 losing trades. So with this with such an approach, you only need to have like 30% winning trades. That's completely attainable. I mean, like, how can you well, I mean, like, it should be 50-50, right? So instead of focusing on say these like super duper trading strategies that give you 100% winning ratio and things like that, focus on proper money management techniques, and maybe switch to forex. So forex is this tool. Oh wow, it closed with a refund. I was hoping it will close. Well, anyways, I think I've just had how many, like, one winning trade, two losing trades, 1, 2, 3, 4, 5, 6 winning trades. Wow, what a nice sequence. So guys, sometimes yes, anything can happen on the markets, and sometimes you can have many winning trades. So and sometimes, of course, you can have losing sequences, and that's that's the charm of trading. So you never know. Sometimes you're winning, sometimes you're losing, and when you win, your goal is to maximize your profits, and when you're losing, your goal is to minimize your losses, and maybe even stop at some point of time. Because if you can see that you've just been having this losing sequence, and it seems that you are unable to cope with it, just stop trading for a few hours. So there is nothing wrong. The markets pretty much they will exist as long as we live. They will be there forever. Seems so, even though they are constantly evolving, but nonetheless. All right, I'm gonna try and a trade on Bitcoin in the downwards direction. So I got this signal from the Safari strategy. So they both point in the downwards direction, and that's a signal for down trade. And Europe composite. And yeah, I think I want to open another trade because the conditions are still there, and even and the signal is even amplifying because yeah, the Williams percent R goes deeper and deeper into the bears area, and yeah, so execute it. Oh wow, this might be a reversal. Did I manage to catch the dip? Did I manage to catch the bottom? Well, we'll see. We'll see. We're going to see. How to win 100%? What strategy to use? Wow, guys, you have to be realistic. It's impossible, but it's not required, right? In order to make money on the financial market, no one. I mean, like, it's not required to have a strategy that provides you with 100% winning trades. It is impossible. Just like be realistic about it. If you have a trading strategy that generates say 60% winning trades on average, that's it. It means that you found your holy grail. So it doesn't have to be, like I said, it's all about money management. Sometimes, of course, the more winning trades you have in your trading strategy, the easier it is to make money, and the more and normally the more money you make from the financial markets. But it's not required to have. I mean, like, you can make money with even, well, probably the lowest win rate on FTT is somewhere around 35 to 38%. So if you have less winning trades than 40%, that's you need to work on your trading strategy. That's kind of obvious, but at the same time, you don't really have you don't need like 90%. Well, it's always great, and that's you make extreme portions of money, extreme profits, but it's not the necessity. Okay, guys, so I had a winning streak. Now I have a losing streak a little bit, and two more trades here. Okay, so this one should close with a profit. So with trading strategies, it can really happen like this, that sometimes you just have multiple losing signals or multiple losing trades, and sometimes you just have multiple winning trades. Let's give it a try. The euro against the GBP, so against the British pound, a signal in a downwards direction here. And well, the euro CAD. So my trade on the AUD JPY is closing with a profit. So that was a signal, the double top signal that you could see in, yeah, here it is, AUD JPY. So this signal came here for 4 hours. So one double top here, amazing double top, worked out just fine, and it's closing with the profit. Okay, a question from Shubham. Why profit percentage on Quickler on split prices down to 1% always? It was 8% previously, now it is 1%. Please reply. Well, I didn't quite understand, didn't fully understand this question, but oh, you mean this one? Oh, well, I don't know. That's how it is. So with so these different what they call expirations, different strike prices. So yeah, just trade with normal like this one, 80%. You don't need these extra 1 or 2%. So because now this like chance of, well, yeah, it's just not good. Yeah, just stick with like with the regular Quickler trades. So we don't need those extreme ones, so to say. Well, guys, okay, put some trade on Quickler. Okay, maybe I don't really like. Well, why I don't like Quickler, or well, it's not like I don't like Quickler, right, guys? I don't like quick trades. So the majority of my trades, because the older you get and the more experience you get on the financial markets, the longer your the longer becomes your, the duration of your trades. So eventually, after a certain while, you just stop trading with like short, like 1 minute trades, like 2 minute trades. You just start trading like 3 hour trades, 5 hour trades. You start investing for year, for weeks, for months, for weeks to come. So we have this stock price trading mode, SPT. Yes, I did one operation. I opened my portfolio in so I gathered my portfolio in that was like end of August, I think. And yeah, that's all. I don't, I don't get nervous. I don't do any kind of analysis here. I just open my trades there and I wait until I can cash out. I can take my money from SPT. So what I don't like about Quickler is that it's just a 5-second trade. And even though with Quickler, yes, it is possible to conduct some sort of analysis with the help of the moving averages and other indicators, but still it's such a quick way of trading. So in this webinar I think I will not be able to show it properly because I would have to stay so much concentrated. I will not be able even to talk simultaneously, because here with 3-minute trades I more or less see, yes, the signal is there, the signal is here, and yeah, I open a trade upwards. Well, thank you for all kinds of feedback, and you talk more about yourself than explaining us when and how to open a trade. Well, every trader is a little different, but yes, I try to. Okay, so let me go ahead and. Okay, guys, how do you use this Safari strategy? Oh, wow. So once again, we are looking at CHF JPY, so the Swiss franc against the Japanese yen. So we have these two histograms. So area and a histogram, let's call them histograms. So when they both point in the upwards direction, like here with Williams percent R and the MACD. So right now we need to look at the exact current moment of time. Where are they now? So they are both above the midline. So that's when we need to open trades in the upwards direction. So they are both here. So I can even open another trade here. So I don't really have to wait for the expiration, for the end of this current trade. I can open my next trade. So I don't really have to wait. Okay, let's watch 10 seconds to go on the pound. So the pound against the Japanese yen. 8 seconds to go. Is this going to be a winning trade or not? Whew, that was close. So nice. This trade closed with a profit. And yeah, so once again, we can open trades in the upwards direction here, because as you can see, the Williams %R histogram points in the upwards direction, and the MACD histogram is also above the midline. So this area is above the midline. So that's it. That is the signal, and we can open a trade now in the upwards direction. Now, how's our GBP USD doing? So the pound, 25 seconds to go on this trade. So went up a little bit, went down a little bit. So 15 seconds to go. All right, so this one closes with a loss, but this trade on the CHF JPY should close with a profit. So now back to Japanese candlesticks. Gold. So I'm only trying to get only the best trading signals, like this one, I think. So the Euro cut. As you can see, these the both histograms are above their midlines. That is the signal for an uptrade. So you don't really have to make it overly complicated. It's already there. Just trade what you see. If you see that they both point in the up, if they both are pointing in the same direction, that's it. You don't have to wait for any other kind of signal, confirmation, anything. So the euro against the Australia dollar. So once again, this histogram of the Williams %R is under the midline, under this -50 line, and the MACD line is also under the 0 line. So that's it. That's it. You don't need anything else. Nothing else is required. Just open trade. Just open your trades in the downwards direction. That's it. -50, 0 line. So they both are in the so-called bears zone or bears area of influence, and yeah, we open trades downwards. Simple as that. Wow, GBP JPY, wow, surging. How to know how much time we have to trade? So once again, every trader has their own preferred duration of trade. So in my example, in my case, when I trade on 1 minute time frame, I usually open trades that I open trades with a duration of 3 minutes. So I think that's kind of like the optimal time, because it's not too little, it's not too much. It allows it pretty much allows. I want to cancel this trade because I don't think it's going to be a winning trade anymore. So canceling trades is always an option when you feel like it's not going anywhere. Like here, I realized that I can still get roughly 40%, a little bit more, like 41% from my investment back, and I just feel like, yeah, the momentum has changed, and the momentum is now like points in the downwards direction. So yeah, no need to wait, no need to risk it. So this one, same story. I want to cancel it. I think it's not going in the downwards direction anymore, because we can see that this one, the MACD is now already above the 0 line. So you can always cancel your trades if you want to save some money. And okay, so let me open a few more trades in the end of the webinar. So the Euro GBP. So once again, the Williams percent R histogram points in the downwards direction, and the MACD line or MACD area also points in the downwards direction. So that's when you want to open trades with a down signal. And yeah, let's give it a try. Wow, still in the downwards direction, in the downwards trend. Commodity composite index. Yeah, let's give it a try. Even though we are kind of overbought, but we are still going north, so why not? And yeah, let's give it a try. AUDCHF. The both histogram are now pointing in the upwards direction. So let's open trades in the upwards direction. So yeah, this will be it. So once again, towards the end of each webinar, I like to open three or four trades, and these are kind of like the last trades of this webinar. So let's see how they close, and yeah, and then I will be able to calculate my profits or losses. Seems to be a winning webinar. So first of all, I'm gonna need to do some maths. Plus that was the right cancel, and this one, well, maybe that could have been a winning trade. I don't know. No, that would still be a losing trade. Well, that was two, so I saved myself $20 with this cancel option. So now the Euro GBP. So now we are closing with a profit here, and 35 seconds to go on commodity channel index or commodity composite index, sorry, and so Europe composite. Yeah, that's what I was afraid of. The price just was kind of overbought. So I'm hoping that this trade will close with a profit. AUDCHF. So I also want to cancel it. So doing position management here. So yes, sometimes just I think 3. All right, so let me calculate my trades here. I started off with a very good sequence. So I started here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 winning trades. I have 13 winning trades. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12, 13, 14. So one losing trade more. So unfortunately, I just had like one losing trade more. Which is your regular strategy? A question from our chat. So my regular strategy, I've got a few. So it's Safari, it's Kind Martin, it's Jektar, it's levels. So levels of support and resistance. It is it's Axel. It's the RSI indicator individually. So there are multiple methods and multiple ways how you can analyze the markets. So ideally, I think you would want to have maybe 3 to 5 trading strategies, like your basic, your default trading strategies. You don't need to have like 10 or more, because it will be impossible. It will just be impossible to analyze. But yeah, 3 to 5 trading strategies is more than enough. You will not be able to use them. Plus, we also have fundamental analysis. We also have levels analysis. We also have Japanese candlesticks analysis. So sometimes the more the better. But sometimes you don't want to have too many trading strategies at the same time, because then you will just all the time you will have contradicting signals, because in order to have all the indicators pointing in the same direction, it is nearly impossible. All right, guys, let me stop here. Thank you very much for your attention, and let me check our schedule. Next Tuesday, the 17th of January, we are going to have, the 18th of January, we are going to have a strategy called triple rebound. So this strategy is based on 3 RSI indicators. RSI triple rebound is this one. So join our webinar next time, next Tuesday. I will be happy to conduct the next webinar for you. So thank you very much for your attention, guys, and I will see you soon. Thomas signing out. Have a wonderful day and big profits.